AI is the worst today that it will ever be. Tomorrow it will be better. The next day will be better. So even if you try something now and you're like, oh, it didn't live up to the hype. Well, remember, these are very early days and this isn't a fad.
When Lotus 123 came out, 1 million bookkeepers lost their job, but 1.2 million new jobs were created in accounting, analysis, and advisory work. The actual salary went up significantly too.
In the 90s, when I started at Ernst & Young, if I failed, there were 10 people behind me waiting to take my spot. Now, that is not the case at all. If I fail, there's nobody behind me to take my spot, and firms can't find enough people. My God, people, if we can't trust the accountants, who can we trust?
Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in. All right. Hello, everybody. So for our last episode of season 1, I've been reflecting a little bit on why I have had such a fun time hosting podcasts. And one of the main reasons is I get to learn a lot. And so we've tried a bit of different types of formats over 2024. And one of my personal favorites is when you get a little bit of a history lesson combined with both practical advice and a peek into the future with an expert. So today we're excited to have Dave Hartley here, who brings over 30 years of experience in accounting, from the big firms like E&Y and Arthur Andersen in the 90s, 2000s, to Protiviti, seeing how technology can impact accounting and audit and how they can intersect to make each other one greater, to becoming a chief information officer, and now at a top 100 CPA and advisory firm as a partner in charge of advisory. So Dave today agreed to talk about automation, AI, and accounting, a modern day look at a timeless profession. But before we go, let's do a little bit of a history lesson of how we got there. So Dave, welcome to the show.
Thanks, Sasha. Great to be here. Looking forward to the conversation.
Yes. So I know you're a little bit of an accounting industry history buff, and I thought, what better way than to get started at the 15th century and work our way back to today? So with that, the floor is yours.
All right, we're going old school, going back to the 1400s. Can't say I've ever done a podcast
Bill and Ted style.
where I've gone that far. So, yeah, so it's great to be here. And it is, I mean, when you think about the CPA profession today, I think it is important to go back and reflect on the past and kind of how we got here. Because I think a lot of people, especially younger professionals, they've just appeared now and they think the profession is what it is and they're frustrated. But I think when you look back and kind of embrace the history a little bit, I think it's telling just in terms of sort of in some of the things we'll talk about today. It hasn't been that long when some of these things came into being. I mean, we take them for granted today, but it's like 100 years ago, there was no income tax, and so things like that, I think are super important. So yeah, so the basics of accounting and bookkeeping go back thousands of years. So obviously, as soon as people started trading things, you needed a system to be able to track those. But then, as you mentioned, big development in the 1400s, Luca Pacioli came up with the double entry accounting system, which is still the core of what we do today, which is amazing. But of course, it evolved during that time. But when you think about it, a lot of it happened, when you think about the Industrial Revolution. Before that, mostly an agriculture-based, economy. And so as a result of the Industrial Revolution, sort of things changed. And now you have these big manufacturing capabilities. So you start developing big companies, big organizations. And as that happened, then obviously things needed to evolve along with it. And that's where the CPA profession evolved from, is basically you need somebody to help establish the rules that you can trust. Then the other key component of that is you need somebody that can check on people and make sure that they're following the rules. So when anybody asks me, what does audit do? It's like, there's a set of rules. Auditors go out and make sure people follow the rules. That's all it is for auditors. So, but as you got to the mid 1800s,
Well, like, what's a double entry mean? Why was that so revolutionary to like a single entry ledger?
I think the basics, and I don't know exactly all the details behind it, but at the end of the day, it's a way to keep a ledger balanced, where when you have one entry, basically there's a corresponding entry, And then then that leads to your classical. When you think of what that ultimately leads to, you think about your balance sheet, which balances your income statement, your statement of cash flows, kind of the core things that you need from a financial perspective. Kind of all of that leads back to basic double entry accounting.
Yeah, and it has a couple just as like a as a mathematician, one of the things I really like is that there's like a built-in set of checks and balances. Like if your debits don't equal your credits, there's sort of like a red flag right there.
Yes, you can proceed no further if your debits don't equal your credits.
Yeah, and as I was starting to learn, sort of the value of this spreading out to both a profit and loss statement and a balance sheet is now you can kind of truly see a sense of financial health. Where if you just have a ledger, you can't combine and really see, is your business heading in the right direction? Is it not heading in the right direction? And actually, as I was studying up, because I knew you were going to do a little bit of history, that actually this was one of the things that made Florence one of the centers of trade and commerce because now the Medici Bank, owned by the Medici family, was the reigning icon families of old Italy, was now able to exchange currency of trades of bills and invoices in one country from another country and one currency, another country to currency, because they could sort of see what the risk of actually financing those things were. So it became this like insanely powerful mathematical like chapter in this math book back in 1492. All right, sorry to interrupt. I was just like, I was so excited about doing that. I had to interject. All right, back to you. Mid 1800s.
Yeah, and then when you get to the mid 1800s, and part of the theme as we talk through this is complexity has grown and continues to grow today. So by the time you get to the mid 1800s, you have this need for firms that can help companies, these newly formed companies, really figure out what this means, what are the rules. And in the 1800s, there really weren't a lot of rules like that. That evolution didn't really come until the 1900s. But in the mid 1800s, that's when some of the big firms today, some of the big four, firms started getting established, public accounting firms to help both establish the rules and then also help people follow the rules. So KPMG, PwC, they trace their roots back to the mid 1800s, which is kind of astounding when you stop and think about it. So, kind of the genesis of the Big Eight, which then ultimately morphed into the Big Four, started in the mid 1800s. And then as you get to the sort of the end of the 1800s, around the 1900 to 1910, that's where sort of everybody's like, okay, we need to establish some rules and we need to. And so the CPA profession basically came into being as one that can, and obviously people were doing accounting, but the whole concept of a certified public accountant and how that's regulated and what that means, that all started between sort of 1900 and 1920. And so, the first CPA exam happened during that time. The AICPA, which is the nonprofit entity that basically governs things for CPAs, the rules, ethics, all those types of things. And the CPA profession is self-regulated. So we have a system of quality management and you get peer reviews and those types of things. All of that is sort of mandated by the AICPA. So all of that started in the early 1900s. And, when you think about that same time as well, that's when a lot of other significant things happened. As I mentioned earlier, the federal income tax didn't come into being until I think 1913. And there were other entities that kind of came to be at that same time. The FTC, the Federal Reserve, kind of that system, all those processes really started back then too. So there was a lot of that stuff that was starting to come to being. And then when you had the 1920s come around, well, that's when probably the most notorious fraud of all occurred, Ponzi. So the Ponzi scheme that happened I think around 1920. And the reason that happened, or basically what a Ponzi scheme is when you bring in new money, but you use that money to pay your old investors, and you just have to keep the churn going so that you keep money coming in so you can pay these ridiculous returns that you've promised to your investors. So that happened in 1920. So that was obviously, a big red flag that, hey, fraud is a problem. We have to figure out how to deal with this. And so that kind of started down the path of, well, then all the states agreed sort of how the CPA should be done. Before that, it was, kind of state by state. And then there were some uniform rules that started to go into place around 1920, 1930, those types of things. But then another major financial event happened, which was the Great Depression. And, one of the things that's interesting about that, like we think about, recessions today, and it's like a 6, 12, maybe 18-month thing. And the Great Depression actually went on for 9 years, from 1929 to 1938, which you think about that, and it was massive in terms of sort of the negative impact, obviously, on people, but on business growth and all those types of things. So at the same time, in that era coming after the Great Depression, the SEC came into being, 1933, 1934. So, and then also there was also the requirement that if you're going to be a public company, you have to have an audit. That came to be in the 1930s as well. So a lot of things happened, early in the century. And then as we move forward, the 1940s, this was interesting. In the 1940s is when income tax withholding began. And when you think of, well, who came up with the system to sort of track, deductions from, for income taxes, and it was IBM, which actually created the W-2, which I did not know. And so when you think about that, some of these institutions, the big four, IBM, have been around for a long, long time. And so that happened in the 1940s. And I think the big thing that happened in 1950s is then the onset of technology. And if you've studied history, these initial computers were about a tenth as powerful as the watch that you're wearing today, but they required massive space and massive rooms to accompany these mainframes that were these first, the first computers. And so that started to hit in the 1950s. Obviously, World War II was in there, all those types of things. And another, you mentioned earlier, I had the privilege of working at Arthur Andersen. And one of the interesting things in the 1950s is that Arthur Andersen actually designed one of the first, if not the first, sort of payroll system for General Electric.
Fascinating.
Yeah, which is pretty amazing. So 1950s, all that stuff starts to evolve. As you get closer to the 60s and 70s, there were some significant bankruptcies that happened. And so new rules came into be for auditors, sort of the responsibilities for auditors, what is and what is not a responsibility of an auditor from public accounting. The FASB came into being, the Financial Accounting Standards Board, sort of replacing the AICPA's role in that. So all of that happened in the 60s and 70s, sort of this continuing evolution and maturity of the accounting and the CPA profession. And then we get to the 1980s, and in early 1980s, up to that point, there were no spreadsheets. And in 1982, Lotus 123 came to be, which completely, before, there was no way in an automated, computerized fashion to do accounting until Lotus 123 came on the scene. Obviously, no more dominated by Excel today from a spreadsheet perspective, but Lotus 123 was actually the first. And that was combined with sort of, starting to see computers that becoming dramatically smaller in size, the personal computer coming into being, kind of all those sorts of things. And so that happens. And then you get to the 1990s, and then that's the boom. That's the ERP boom. So that's when the SAPs, the Oracle, sort of these massive systems to run a business, came into being, and that's when they really became popular, which, by the way, early in the 1990s is when I started my professional career. So not only am I pre-mobile phone, but I'm also pre-internet. And are you ready for this one? I'm actually pre-email. I remember when I got my first email address when I was at Ernst & Young in the 1990s.
Your first email address came from your work.
Yeah. Yeah, and I remember at the time, it's crazy when you think about the early days of the internet, like sort of the uses and the things that, people were trying to use it for and how that's evolved and everything. So yeah, I'm that old, which is crazy. But you saw, public accounting firms grew in the 1990s, and then the 2000s were interesting because the whole dot-com frenzy of the late 90s, that crashed in 2000. But then you had two major frauds that occurred within almost back to back. The first being Enron and the second being WorldCom. And those two things were huge. And so as a result and a response to that, the Sarbanes-Oxley Act came into play, which you may have heard of as SOX. But the Sarbanes-Oxley Act was basically, the primary objective to that was to restore investor confidence in financial results. And probably the biggest thing, one of the things that came out of Sarbanes-Oxley is it actually put criminal penalties behind fraud. And that was the first time that happened. So officers in public companies under Sarbanes-Oxley have to attest to the accuracy of internal controls. And also at the same time, internal controls became big, Like before, people were documenting internal controls, but now it was like Sarbanes-Oxley, like you had to do opinions specifically around internal control. And which was a major big thing, but that leads down the compliance path that has all this has grown. You sort of had, compliance in taxes, compliance in financial reporting, and all of those things have been really core to the CPA profession as it's evolved over time. So then you get to 2008, 2009, you have the Great Recession that happened. And so that was obviously problematic. 2008, 2009, Lehman Brothers collapsing, Wall Street almost collapsing. If you haven't studied the history of that time, I mean, I lived it. And I remember thinking the next day, I don't know if the financial markets are going to be there, which is astounding when you stop and think about it. But that's where we were at that time. And then right after that, then you had Bernie Madoff. That got exposed. Madoff's. So, once again, these frauds happen periodically. People always come up with a new way to commit fraud, or the systems and processes aren't designed appropriately. So that's always going to be there. And then as you get to the 2010s, that's when technology really comes into play. So you had the ERP boom, but now the money's being invested. There's all sorts of other technology, the rise of smartphones. That was another thing. I was pre-smartphone. And I remembered when I was in my CIO gig, I made a controversial decision to implement iPhones because when I looked at the usability of the iPhone, they're like, I remember getting feedback. Well, that's not a business tool. That's something, that's a consumer thing for entertainment. And I was like, no, it's a much easier user interface, which is what our users need. It's what they're asking for. So that was one of my, early decisions in my CIO career. So, but then as you play that out, I mean, that kind of brings us up to today. So now, one of the things that's happened, and there's always predictions about, sort of the rise. But when you think about the rise in complexity, globalization, kind of all of those things have happened, which has made the business environment today so incredibly complex, especially for small and mid-sized businesses, which is where, my firm focuses. It's like they don't have the internal resources to be able to deal with all of this. And the rules, we've added rule upon rule upon rule, both to the tax code and to financial reporting. So it's made everything more complex. The regulatory pieces are there. So yeah. So in 10 to 15 minutes, that's kind of the history of accounting up to the end of 2024.
530 years and 15 minutes. All right, that's good. So now let's start making this a little personal, right? Because we know that accounting looked slightly differently. While the fundamentals of double entry accounting have now existed since 1494, how we actually use and think about accounting in our businesses and as a career has changed and then will change again. So let's go back to the start of your journey. What was the reason why you got into accounting in the first place?
Okay, interesting. So I wanted to be a pilot. So I was headed down the aviation path. I was going to go to Embry-Riddle in Florida, and then I heard that pilots have to have perfect vision. And if they don't have perfect vision, then you can't be a pilot. You'll never get to the top of the profession. So I said, well, that's not for me. If I can't get to the top, I don't want to do that. So then I went and I thought I'd be an engineer. And I discovered I didn't like math as much as I thought I did. So that one kind of caught me off that, and then I looked for the next thing. I come from a very modest background, so the concept of employment and actually having a good living and earn a good wage was very attractive to me. I also was told if you study accounting, it's the language of business, and it's a fundamental thing that you can use wherever you go. So even if later you decide to do something different, if you've been schooled in accounting, you understand that will come back and reward you for your entire career. So sort of the stability of that and the fact that it's kind of, if you're just going to be an entrepreneur, well, you need to understand accounting. So all of those pieces kind of came together. And so that's what made it a sense, so logical for me. And then when I started studying it, I was like, I actually like this. This is interesting and it's a good fit for me. And so from there, yep, studied, got the degree in accounting. At the time, you only had to have 4 years. You just had to have a bachelor's degree to take the CPA exam. And so I'm one of the old school guys that got in before there was a fifth year requirement for the CPA.
Got it. Got it. Yeah, when we started studying and researching, it was seen as a steady job and a way to make pretty good money. So we'll see if that's still the case. I think it is actually. I think AI is going to make accountants even wealthier and make more money than before. But I don't know. We'll see. We'll talk about them. So do you went then from your let's see, let's get into accounting. The traditional career path then is to go to one of the big firms. What's your view on sort of the path to get your actual CPA license versus just doing accounting inside of a company?
Yeah, and I do get that question a lot from, students in college trying to figure out what they want to do. Hey, the CPA, I heard there's an exam and you have to do these things. And in my mind, sort of, doing accounting is really good. But it's like that sort of to get to that next level, that's where you have to put in the effort to become a CPA. And in my mind, it's sort of one of those things that once you have it, you can't, well, you can screw up and get it taken away, but for the most part, it's with you for your entire career. So, and even today, and even when I went and did my CPA or my CIO gig, people were still, I was really the business focused CIO. And the fact that I had a CPA, people knew, I mean, it just says something about somebody when they're a CPA. They've achieved a certain standard. They've been able to take a very complex exam and pass it. They've been able to uphold the ethical standards of what's required to be a CPA. So kind of all of those things. I don't know if I'm answering your original question, but those were some of the things that come to mind as it relates to that.
Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Hey everyone, Eric here. At Turpentine, we're always looking for ways to streamline our work. That's why we use Notion for all our internal documents. It's been a game changer for us, and I want to tell you why. Notion is this amazing all-in-one workspace that combines your notes, docs, and projects. But what's really cool is their new Notion AI. It's like having multiple AI tools built right in. You can search, generate, analyze, and chat, all without leaving Notion. What sets Notion AI apart is how it personalizes responses based on your content. It's not just another generic chatbot, it understands the context of your work. Plus, it can search across thousands of docs in seconds, even connecting to tools like Slack and Google Docs. And get this, Notion is used by over half of the Fortune 500 companies. Teams using it send less emails, cancel more meetings, and save time searching for their work. It's designed to keep everyone on the same page while protecting your privacy. Want to give it a try? Head over to notion.com/upstreampod. That's all lowercase. Notion.com/upstreampod. You can try Notion for free, and when you use our link, you're supporting our show. Give the powerful, easy-to-use Notion AI a shot today at notion.com/upstreampod.
Yeah. But so then you decide at some point after a little over maybe a decade or so of being a public auditor, public accountant, to go into a path into a chief information officer path, a CIO path. Tell me a little bit more about that, because just from an outside perspective, it is sitting in Silicon Valley as a technologist, building software and thinking about information. It seems like a slightly different skill set. So tell me a little bit more about that transition and that job.
Yeah, and it was a major transition. One point I do want to make though is even while so I did the 90s at Ernst and Young. And so I started doing pure financial audit, but then I realized I've got this bent for technology, and I'd worked for IBM in college. So I'd always been, naturally interested in technology. And so I started doing IT auditing. So I was auditing the systems and the processes and the internal controls around that. And then later in my public accounting career, I actually shifted to where I was doing consulting at EY. And so even while I was in public accounting, and that's one of the things today, it's like it's not just audit and tax anymore in public accounting. There's so many different options and so many different ways that you can go. But the technology pivot was interesting. And you're right, it's a very different skill set. And so for me, what was attractive to me was it was actually at a client that I had worked on before, and I'd had a relationship with them for decades. And I loved the people, I loved the company, and I was working on a project for them, and I was meeting with some of the executives, and they mentioned, "Hey, our CIO just announced his retirement." I was like, "Oh, okay. Well, maybe I can help you find somebody. What are you looking for?" And they described what they were looking for, and I was like, "Check, check, check, check." I'm like, "That sounds a lot like my background. We should probably talk." And as I explored it, I've always, even though I love the CPA profession, I did have that itch for technology. And so I had been doing a lot of technology projects. I was heavy in cyber. I'd done some system implementation things. And then when this opportunity came around, it was perfect for me because they wanted a business focused CIO who was really focused on on primarily the employee experience at the time. And so I was a great fit for it at the time. And so I ended up doing that CIO gig for 6 years and I loved it. I absolutely loved it. And I think now that I've come back to the CPA side of the world, so after I left that CIO gig, I did some virtual CIO stuff for a while. And then I eventually came back to the CPA profession. And I think what makes me valuable as an advisor is that experience sort of being a consumer and being a CIO and having all these service providers and figuring out what created value and what didn't. And then bringing that back to the CPA world where really what's happening, the CPA profession today is evolving rapidly and it's probably the most significant period of change ever. And so that for me, sort of the bringing the technology bent back to a progressive CPA firm has really been a fantastic pivot for me.
Let's dive right into that. As somebody who was in venture and has started a few companies focused mostly on software, I see a lot of technology software evolving over time. The players evolving, the products evolving, but sort of accounting and sales CRMs seem to be two of the most protected in there. Like you said, I think that the first ERP, the first payroll was built by IBM. I think the first ERP was also built by IBM with for tractor supply chain stuff. So IBM was in there, and then that sort of evolved into some of the stalwarts, SAP, Oracle, NetSuite, companies that have been around for decades, longer than some of the listeners on the show, and since I was just a young pup. Why do you think? Why do you think the industry software is still so dominated by some of the stalwarts?
That's actually a really good question. When I think about let's talk about CPAs in general. And this is probably the perception that's out there among your listeners, which is CPAs aren't known for their embrace of change. And so there's a lot of things. And when we just went through the history of sort of accounting and CPAs, and it has evolved over time, but there really hasn't been a lot of dramatic movements. The rules change and evolve, but for the most part, it's relatively consistent. And I think that's part of it. I think also there's some major players sort of that dominate the accounting, like what runs public accounting firms. And I think specifically for the CPA profession, I think that's some restrictions. But when I think about the sort of why the lack of investment would be there, I don't know. I think there could be, the SAPs and Oracles obviously have dominated things for so long. And I think there's been a lot of startups that now people see the opportunity in the accounting space, which is why private equity is so interested in the accounting world as well. But I don't know, maybe investment because of the big guys, maybe that was held off. I'm not sure. What's your opinion? What do you think?
Well, I'll answer in a sec, but I would love to. We hear a lot about sort of the CPAs are more conservative. They're a more conservative sort of nature. You're a CPA. You also moved over into technology. What is it that attracts either? Is it causation or correlation between CPAs and the conservative nature of software?
Yeah, I think it's, and I'll answer this question with a story, which is so when I was in college, when you're studying to be a CPA, one of the parts of the CPA exam is business law, and obviously a key part of that. And I still remember vividly to this day. I remember the room. I remember everything about it. My business law professor, outstanding man, Gola Waters was his name, and Gola came into class one day, and he was very concerned that people were cheating, and he was standing in front of the room and he was getting loud, getting angry, and he turned around and he looked at us and he said, my God, people, if we can't trust the accountants, who can we trust? And that has stuck with me to this day. It's like, yeah, if you can't trust the accountants, we got a problem. So I think sort of that bedrock foundational sort of this is always here and we need really solid people. And I think part of it also is the fact that it's a very technical skill and you have to learn the rules. And there are a lot of rules. Some people like rules, some people don't. So I think the people that naturally gravitate to rules are generally conservative people that generally, play by the rules, follow the lines, kind of all of those things as well. So I think it's probably a little bit of both, that kind of people are naturally attracted to it, that like rules, that like consistency. So I think there's that. And I think that's one of the interesting sort of evolutions that the CPA world is going through, as that skill set and sort of being ethical and trustworthy. That's the bedrock. That's always going to be there. But then there's more and more need for CPAs to apply those skills differently than how they've been applied in the past.
Yeah, it's a good part. I think about this constantly. My general point of view is that it's a combination of three factors. One is that accounting, like you said, is about trust. And a lot of software is hard. It's not designed in a way to instill trust. It's designed in a way to instill automation or to make things feel simple. And accounting isn't simple. It's complicated. Like you said, you have to study for years and years and years and years, and you have to pass a very complicated exam. It's not just something you kind of pick up. And so I think that there's always an inherent conflict between an evolution of software and what it's trying to accomplish. And so I think that that's one conflict. The second conflict, I think, is it's just hard to build. Like you said, there's so many edge cases, there's so many rules, there's so many things. Every business is slightly different. That a lot of actually the first generation of cloud software still works really well for accounting, which is almost like a spreadsheet. You can do anything you want in any case, and it's very flexible. And third, I think, is fear, which is when I saw a chart published by some credible source. I'm blanking on it now, but we'll link to it in the show notes, which is when Lotus 123 came out, I think 1 million bookkeepers lost their job, but 1.2 million new jobs were created in accounting, analysis, and advisory work. And that's scary, right? If your personal livelihood sort of depends on it and you're like, well, which bucket do I fall in? Do I fall into the 1 million? Do I fall into the 1.2 million? And this to me is the closest analogy between what's going to happen potentially now with AI, which is there will be some jobs lost. The people who get to the other side are going to make more money because salary, it wasn't just more jobs were created, the actual salary went up significantly too. So there were less jobs available, but those jobs, or there's core accounting jobs, but the evolution to an advisory role and to a more senior role came up and the salaries went up. I think that's going to happen a lot now. And so my fear is, well, how do we bring an industry along so that more people who are interested want to be in that other bucket can make more money? But I still feel fairly confident because even if the core day-to-day of accounting doesn't look the same tomorrow as it does today, like you said when you first started off, if you understand how businesses work and you can speak the language of business and you understand financial health and the drivers of business, you're going to have a job out there. There are some industries where the job could go away almost entirely and with AI. And I think that's not necessarily the case here, but I don't know. Let's talk about it. What do you think? What are some of your first impressions of where AI is today for accounting and where could it go?
So I think, so one of the issues I think, or one of the observations that I would make is that part of what you're going to hear from the accounting and the CPA community is a great deal of cynicism, because we have heard, the profession has heard for over 20 years, probably 20 to 25 years, which I, in 2 years, in 3 years, we won't need accountants. And because technology is going to is going to do everything, or we won't be doing tax returns anymore. It'll just be done. So all you CPA firms, you guys are all going away. So there's a great degree of cynicism because that's been spoken over and over by countless software providers and other people, speculating on the industry. And I think the state of where it is today, I think obviously the big four are investing billions in this because they see a massive opportunity to completely change the way that work is done and how their people are repurposed, and or a lot of maybe the tasks that are being done today aren't creating, there's a better way to do it and create that value without having a person do it. And so I think the big firms are, incredibly interested in it. When you get to the middle tier, I think there is also a great degree of interest, but yet they don't have the resources to build their own tools. So that's where you get into, well, I'm going to look at what can these solution providers bring to me. And then when you get to the really small firms, say 20 people or less in a CPA firm, there you have a lot of, we really don't know what to do with it. And so I think it varies by where you're at. Obviously, if you're an individual practitioner, if you're later in your career, the likelihood that some of these things are you're going to embrace them, rapidly is questionable. And as you mentioned earlier, CPA profession, conservative. And one thing that you didn't mention that I'll add in is also, like, you can't screw this up. Like, this is mission critical. And if you do try, because when you think about software and rollouts, there's lots of promises and it generally doesn't work the way that you've been promised that it will. And when you think about financial reporting, accounting, those are things you can't screw up. They're too important. They're the lifeblood of these businesses. And so when you think about tinkering with it and changing it, that's when people get really concerned. And I remember when I was doing my CIO gig, we were debating moving to a core ERP solution. We had more of an industry specific solution. And I still remember the angst about, I actually had the CEO that kept coming into me every quarter. He was on the board of a railroad that was implementing SAP. And every quarter he'd come in and say, guess what it is now? And it was, what's the cost of the implementation? And, it started at 26 million. And then every quarter he would come in and it was, eventually became 70 million, 80 million, 90 million. I mean, just these massive dollars. And then it doesn't work. Everybody heard, Hershey couldn't ship chocolate for Halloween. And, and so all those types of things, those stories are there. And I think for that reason, people are very concerned about tinkering with their accounting systems because they know they're so important. And they know that that's not, if you're going to take risks, that's probably not an area to take risk.
So as I'm sitting in downtown San Francisco right now, and I had to go pick up my wife from the airport. So it's about a 15-20 minute drive between downtown San Francisco and the San Francisco airport.
Okay.
And there are billboards on every single side. AI this and AI this. Though this time driving down, there's a lot of hire our AI, like hire our AI salesperson, hire our AI marketing person. Nothing yet that says hire our AI accountant or bookkeeper yet. But it begs the question, is this time, is it different? I mean, you've been around doing this for a while. I'm sort of new into this space, but it does seem that there are at least promises of AI people in different departments, not accounting, sort of on the billboards. The Chat GPT 4.0, I think, supposedly passed the CPA exam. Is it? I totally get the skepticism. Do you think it's different this time, or is it a we don't know? Let's see.
I do think it's different this time. And I have debates here with people, at various levels within the firm and we talk about different things. And I do think this is real. We've got things that we're doing where we have specific use cases that we're pursuing. We've got different technologies, both things that we're putting together in-house as well as things that we are subscribing to, solutions that are coming to market. And and when I talk to people about AI, it's like, it means so many things in so many different areas. Like even now, Teams, and there's a lot of great third-party solutions that take meeting minutes and do, things that a person used to have to do. So I think it's already there in many cases. Like if you use Teams now, the Teams capability for taking meeting minutes and recordings and all those things, I mean, it's light years ahead where it was just a year ago. And that's another thing I remind people of, which is AI is the worst today that it will ever be. Tomorrow it will be better. The next day will be better. So even if you try something now and you're like, oh, it didn't live up to the hype. Well, remember, these are very early days and this isn't a fad. This isn't anything that's going away, or there wouldn't be billions or trillions of dollars being invested into this. And so I do think it's different. I think it will have an impact. I think it's already having an impact. And I think sort of the ability and a lot of, the discussion around, well, replacement when it comes to accountants and CPAs, I think it's, and I was actually on a panel with some educators and one of them said something that I thought was great, which is, give me one person using the tools versus two people without the tools, or 3 people without the tools. And you start thinking about that. It's like those are multiples of productivity that are possible as these things start happening and automation kicks in addition to AI, and our systems get better. And now, systems are designed, people are building these incredibly, innovative solutions that cause things to happen. You have better visibility, better reporting, kind of all of those things. It's creating this whole new tool set that people can now use to actually predict the future, much better than we've ever had the capability to do that in the past.
So if you're sort of and paint us a bull case. You're a brand new person thinking about majoring in accounting. You're a mid-level accountant thinking about, you're maybe 10 years in and you got another 20 years to go or however long we have to work these days. Or you're one of these sort of I think I read a stat, 75% of CPAs today are approaching retirement age. What's the bull case for each of these segments?
Okay, interesting. So let's start with somebody coming into the profession. This one is the one I've probably spent the most time in because I served on the educational foundation for the Missouri Society of CPAs. I'm active in recruiting. My kids are of the age now where they're starting to, go through college and pick careers and those types of things. So on this one, I actually believe today is the best day ever to be a young CPA, and tomorrow will be even better. And if you want more, if you want to learn more about that, I actually did several podcast interviews and I wrote an article, why today is the best day ever to be a young CPA. And the genesis for it was the Young CPA Success Show. They reached out to me and said, basically asked that same question. And so I thought about it and I was like, well, actually, I think it's the best day ever. And then I started listing out my reasons and I came up with the David Letterman top 10 reasons why today is the best day ever to be a young CPA. So if you Google that, Dave Hartley, best reasons to be a young CPA, you'll find the articles, you'll find the podcast.
Like, and we'll link to that. Can you don't give us the top one or two, but what's like 5, 4, 3? Like, it will leave us with a cliffhanger.
Well, there's a lot of things that I think have fundamentally changed about, number one, CPAs and accountants are scarce. So in terms of your job, what that's going to look like in the future, it's amazing because we have a pipeline issue. We have a reputation issue in the CPA world. We're not getting enough youngsters to come in to replace the people that are going out. And as a result of that, that makes you more in demand. In the 90s, when I started at Ernst & Young, if I failed, there were 10 people behind me waiting to take my spot. Now, that is not the case at all. If I fail, there's nobody behind me to take my spot, and firms can't find enough people. So I think that's a big one. Another one is flexibility. Like if I go back when I started my career, suit and tie every day. You could wear a blue shirt on Friday because that was your crazy day. I mean, it was very locked down. And when I think about my firm, when I think about the profession in general, we have become much more. We've retained the integrity and the trust and the ethics, but we've become a lot more relaxed because we've realized that's what our clients want from us. They don't want somebody in a suit that is, that they can't relate to. And that's one of the huge things for the future is communication. So flexibility, also the advent of remote work. I mean, you can do accounting and you can do advisory work from anywhere. As a matter of fact, we have some people from some disadvantaged places in the countries that are part of our virtual CFO team. And they're like, I couldn't do this if it weren't for the opportunity to work remotely. So I think there's a lot of great reasons, to come into the CPA profession today. To go to your next tier, that mid tier, if I were in that tier, I think one of the things that I would advise is double down on the technology, start being the person that raises their hand and says, yes, I'll try that tool. I'll try the new way of doing things because I think that's going to be super key for the future. And that's how you'll distinguish yourself and ultimately learn the skills that are going to make you successful long term in your career. So if you're in that middle bracket, that's one of the things that I would say. And then also, if you are doing, repetitive, mundane things, I would say either look for an opportunity within your current role to do some things that are more on the predictive side and actually taking this data and doing something with it, not just processing the data. I think that would be a great step. And then also practice your presentation skills, practice your communication skills, because that's going to be so important in the future. Because I think AI and other technologies will do a lot of the sort of the average work or the things that need to get done. But there's still going to be that need for somebody to help interpret the results, for somebody that can relate to a human and ultimately persuade them, educate them. And that's different for everybody. So if you're in that mid tier, I'd say, really, really focus on that. And then your last group, the 75%, yeah, we have an issue in the CPA profession where we do have a lot of people that are within, 5 to 7 years of retirement. And we don't have nearly the people coming into the profession to be able to replace all the people that are going out, which is one of the reasons I think AI will also succeed in the CPA and the accounting space, because there's just not enough people. And so out of necessity, we're going to have to come up with, ways that we can use people better. And that's one of the things that we do at our firm, is look for how can we make these people that come in 1, 2 years of experience be as wise as somebody that's got 20 years of experience. Figuring that out, I think, is part of the magic. But if you're on your way out, I think you're probably, the CPA profession moves at a pace where that's probably, if you've got 5 years or less in your professional career, you're probably going to be okay. If you've got more than that, I think this is a force that you absolutely have to reckon with. And if you have, the one thing also, if you're trying to get out of if you're exiting the profession and you're retiring, you have to recognize that if you've got a practice where all you're doing is 1040 tax returns for individuals, that's one of the first things that's going to be automated. So I think you have to assess your practice against sort of where the solutions are going to come that could potentially make you irrelevant.
Got it. Interesting. So as this has been fascinating. I know we could go on for a lot longer, but we're getting towards the end of time, and people only have so long of a commute that they can listen to this podcast, unless you're living in LA, and then I know you like the long form Joe Rogan 3-hour podcasts for your 2-mile commute. Tell us a little bit more about Anders CPA. There's a lot of firms out there. What is it that drew you to them, and what do you think that you guys do well that other firms don't see?
Yeah. So Anders is a top 100 CPA firm. So I think we're 73rd, 74th largest CPA firm in the country. And so from my perspective, what I love about it is we're the perfect kind of Goldilocks firm. In that when I was in Big Four, I felt like I was just a cog in the wheel. And it's like, if I didn't do my job, it really doesn't matter. But when you deal with small to mid-sized companies in this size firm, your work makes a difference. And if you do outstanding work for your clients, it makes a difference in somebody's life. And so I think that's very attractive. In addition to Anders being big enough, if you're at a smaller firm, you don't have the people on your team to be able to do all the things that you need to do. And so we're about 400 people. So we're right at that size where we've got enough mass, but it's not too much to where it feels impersonal. So I kind of feel like we're the Goldilocks firm. Plus, when I got to know the leadership here, some of the best people I've ever worked with in the industry are at this firm. And I think because of that progressive attitude, our willingness to embrace risk, focus on advisory, that we've attracted a lot of great talent. And I think that's part of what makes, Anders such a great firm to work at. And then also in terms of the value that we deliver for our clients.
Awesome. I love it. I love it. And it looks like you guys are actively hiring right now, not surprising for a top 100 firm. How can people learn more about Anders? How can people find the podcasts or the writings that you talked about before?
Yeah. So a couple things. One is, so we are very transparent. Transparency is a core value for Anders. And so we are very open with our thought leadership. So we put out a ton of stuff. We teach people how to do virtual CFO services. And so you should follow our socials. So Anders CPA is definitely a great source. I co-host a podcast for the firm called But Who's Counting? We're in season 3. Our focus is on innovation. So there's a ton of great, both podcast form, blog form, a lot of ways that you can learn lots of things from the firm. And in addition to that, connect with me on LinkedIn, linkedin.com/Dave Hartley. I post a lot on LinkedIn, a lot of these types of conversations, my point of view on different things, and sometimes I pontificate things, and it seems to be helpful to people. I love it when people reach out in my LinkedIn comments and say, I love the stuff that you put out there because I've learned so much from some of the things that you put out there. And it's one of those things, I don't think I'm that smart, but I've been around for 3 decades. And I think as part of that, you learn a few things. And I think I'm able to impart some of that through my, LinkedIn postings.
Well, it's obvious and it's easy to see it coming through your voice. And for those watching on video, through the video, just an endearing smile, a wealth of knowledge, and a genuine desire to help. Dave, thank you so much for coming on the podcast. I really appreciate it.
Thanks, Sasha. I enjoyed it.
All right. Bye bye.
Thanks for tuning in to Turpentine Finance. Share it with your executive team, direct reports, friends, and family. And if you want to support the show, the best ways are to leave a review wherever you're listening and subscribe. Turpentine Finance is part of Turpentine, the podcast network behind Moment of Zen, Turpentine VC, Age of Miracles, and more. Shows for experts by experts in tech.